Hello everyone, welcome to my YouTube channel Wealth Unlimited. Here, in the series of talking about investments to grow your money, today I will be giving the overview of Indian banking sector along with the best banking stocks to add in your portfolio right now. This video is not a recommendation that you should buy these stocks. Please do your own due diligence before investing in the stock market. Let's begin and talk about the banking industry and why it becomes the best bet. The financial and the economic conditions of India are far superior than any other country in the world right now. The studies suggest that Indian banks are generally resilient when there is a global downturn. Why I believe that Indian banking sector can do well is the digital payment system in India is one of the best in the world. And the mobile, internet banking, and extension of facilities like ATM has improved a lot of operational efficiencies in the banks. There has been continuously low non-performing assets shown by the banks, which plays a major role in the healthy business fundamental of the banks. NPAs stand for non-performing assets, which you can take as bad loans. And one more thing, why banking sector can do well is there has been a robust demand in the banking sector with increase in working population and growing disposable income. It is expected that by 2025, that Indian fintech market is expected to reach 83.48 billion US dollars. Now, I'll talk about the rate hike, which was done by the RBI in last month from 50 to 50 BPs points. So, why interest rate hikes can play a major beneficiary for the banking sector? As we know that to curb the inflation, the Monetary Policy Committee voted to hike interest rate by 50 BPS in the last month. But RBI also kept the GDP growth forecast unchanged to 7.2% for the India. There has been further possibilities that if the inflation keep on rising, that there can be more further interest rate hikes. Now, let's understand the impact, like of what is the impact of interest rate high on the banking sector. With hike in interest rates, the banking sector profitability increases as these are the banks and the institutions hold the customer money where they can lend these money on a higher interest rate and giving less rate to the customers, which plays into their favor. As we know that India is a developing economy, means that the more and more consumers seek loans, helping banks as they benefit from the difference between the interest they charge to investors for the loan and the amount they earn by investing the money is the key why banks and financials can do better in the coming years. Now that we have talked about the RBI policies and have given you somewhat information about the banking sector, this is the chart of Bank Nifty. I won't go into the fundamentals of charts or anything, but I must tell you that banking Nifty has corrected well. Bank Nifty has corrected well in past couple of months, and it has taken a massive support around the levels of 32,000. So, what is Nifty Bank? Nifty Bank consists of all the large banks, and it is an index of the bank. So you can by seeing this chart, you can understand like how the banks are doing. All the banks of the countries are doing. Most of the banks of the countries are doing in this particular chart. So you can see that there has been an uptrend since July onwards in the banking sector, which shows that there is a growth potential. But again, like if we go by the chart theory, there has been like resistance and supports, and I believe that buying level of 33,000 to 32,000 for the bank Nifty is a great support. Now, the top three banks, which can be the game changer in coming years, is number one, ICICI Bank. ICICI Bank is a large private sector bank in India, offering a diversified portfolio of financial products and services for the retail, SMEs, and corporate customers. The bank has an extensive network of branches, ATMs, and other touch points. They have their subsidiaries like ICICI Securities, ICICI Prudential, and Lombard General for the insurance, which are doing great businesses out there in the market. The company has delivered a good profit growth from last 5 years, and I believe that the perfect buying level for ICICI Bank, according to the charts and the support level, 650 to 700 is a great price to buy. Talking about the financials, company has improved their revenue since 2019. As you can see, that revenue on 2019 was 20,366 crore, and today, as we stand on March 2022 or 2022, it is 24,999. There has been increase in profit also and in earning per share, which makes it a great bet to add in your portfolio. The next stock which comes on my radar is SBI, State Bank of India. It's a public sector banking, and it is India's Fortune 500 company, multinational public sector banking and financial service body. It is highly supported by the government policies, and SBI is the largest and the oldest bank in India with over 200 years of history. The company has done exceptionally well in last 5 years, giving good profit as well as improving their financials and balance sheets. The company is trading near its fair value of 400 rupees, which makes it a great bet to add in your portfolio. The buying levels for this company is 400 to 450. If you by chance get this company share below 400, you should definitely plan to accumulate the stock. It is trading at the price to earning ratio of 12.1, which is like one of the lowest in the banking sector. The third stock which I'm going to talk about is Axis Bank. So, talking about the Axis Bank, it's again a private sector bank. It is the third largest private sector bank. The bank offers a whole financial services to the customers, spanning across all large and mid corporates, MSMEs, agriculture, and retail business. It is also one of the best in the digital banking space, with 19% share in UPI transactions, 17% share in the mobile banking, and 11% share in the credit card in circulation in India. The subsidiaries for the company are Axis Capital, Axis Securities, and even Freecharge as a part of Axis Bank. The company has delivered a good profit growth in last 5 years and likely to continue this in future also. The best buying level for Axis Bank is 550 to 600, and the company is trading at a PE of 14.4. The company financials, you can see that again they have been doing great when it comes to the revenue. They have been increasing their revenue since 2019, and they are able to reach the revenue of 18,209 in March 2022. The net profit is rising since 2020, and they have been a massive improvement in their balance sheet. Now, many people might be thinking, or many people will talk about, like why India's largest bank, HDFC, is not present in my top three list. HDFC is definitely one of the great stock you will find in the market, but few days back only, HDFC posted their results, and I personally didn't like those results. So I believe that there can be a further downfall in that particular segment, and HDFC Bank might fall to the levels of 1200. Right now, it is trading between 1350. So if it falls below 1200, it can go to 1000 rupees also. And if you get HDFC Bank in the levels of 1000 to 1200 rupees, again, like according to your preferences, I see value in it. In nutshell, all the companies has a great loan growth, and they have been improvement in their asset quality. They are some of the banks which I believe can be wealth creators in the future, and definitely they should have a place in the portfolios. That's it in today's video. I hope you liked the video. Please make sure to like and subscribe for more such content.